365, ladies and gentlemen, shake my hand and welcome to another video. I've been doing this incredible series of one asset analysis short format version. All right, so I look at one asset, I break it down long term. So I'm looking at from the very beginning of time to understand the current trend we're in. First of all, on a 1 year time frame, a 3 month chart, a monthly chart, a weekly chart, and a daily chart, to teach you, the trader, the importance of sequence alignment. I've been working. So it's been about 5 days ago, which was my first video on Euro USD. Then we did Pound USD, we did USD JPY, we did USD ZAR, we did Euro ZAR. But all these videos are already up on the channel. USD Swiss franc, Euro Pound, gold yesterday, and AUD USD this morning. And today I am here to break down NZDUSD with you. Please do subscribe, please do follow, please do take action. This is the same type of analysis that got us all these war room trades that we did last year. We stopped at war room number 88, right? And war rooms will begin after I'm done with this, this type of, content that I'm doing short. The videos are on average about 20 minutes, absolutely worth your time. And we are literally looking at catching the 2023 long-term trends, so that we're always on the right side of the market. Those of you who've been with me for a very long time, you know it is possible to be on the right side of the market most of the time. Yes, there are acceptable losses. There are losses that come with any type of trading system. The biggest variable in any trading system is you, the trader, your discipline, your understanding of the rules, your understanding of the actual market structure, your understanding of order flow mechanisms. But in generally speaking, when you master those things, if you take the time to master those things, if you take the time to master those things, right in front of you here, if you register, you go to our dashboard, please don't forget to enroll. Those of you who've jumped onto the course already, I'm looking forward to hearing from you, all right? But registering is not enough. Once you get approved by my admin team, you have to enroll, right? The link is not enough. You create your own password, you get your own access sharp, but enroll so that you have full access to this stuff, right? This is our module 1, get the basics out of the way, introduction to supply and demand. And those of you who've been through the course, this is a 2 to 3 hour detailed lectures, right? This is like a whole entire trading system. Hand in your activity homework so I can look at them, please. This is the only way I can test that you're understanding me. So every now and again, after some lectures, there'll be lesson activity, some analysis work that I need you to do so I can give you feedback, right? So keep pushing that particular narrative. Then is when you're done with my module 1, jump on to module 2, jump on to module 2. This is the trader's edge, how we compete with the banks and applying supply and demand, a value-based demand, peak supplies, all those good things. Don't forget to kind of like keep doing the assessments. Don't jump onto a live trading account until you've mastered this stuff here, right? This is an incredible, well put together course, and it's only half of it right in front of you, right? So don't forget to subscribe, number 1. Number 2, check down the link below and join us in institutional supply and demand trading, which is pretty much what I will be doing and demonstrating today on NZDUSD. NZDUSD, right? So I was going to do this yesterday, so I already had the chart open. And then I actually realized that I was quite low energy, right? But in front of us basically is the markings of 2022, right? So I might have to start all over again, but I want you to see basically the format that we followed last year, right? In 2022, we knew that last year the dollar was going to be strong because of the FOMC, the interest rate increment, and so we knew that these were the type of sell type go-to assets. And you can see that most supplies, if not all supplies, were absolutely engaged. Number 1. Number 2, hear me, guys. The importance of these videos, understanding this, is not me trying to produce content for YouTube. You guys kept asking, where is Leroy? When is he coming back? I'm back. I am back, but this is part of the work. Once you understand, you see, I would have done this in December and January by myself and then started War Room. This is how I start my year. I'm starting my year now with you all the way in April. Those of you who are part of the academy, you know where I've been and etc. If you look at January 2022, it starts somewhere there. That's literally how this chart started last year. So why are we doing this? When you understand the dominant trend, the trend of the year, if you understand the narrative that the banks are going to push for the next 12 months, you will then put yourself in a better position to win more than you lose, because you'll fundamentally know that if the trend that has been set for the rest of the year is to buy, you have no business selling, and vice versa. And last year, I'm just trying to get my settings right. There we go. Last year, in January, we already had basic things in the works. Later on, last year in 2022, we had a war and all that kind of stuff. But the basic stuff that every single banker knew was that the FOMC had already threatened last year that they are definitely going to have to slow down on printing money, completely stop printing money, and start to tackle this inflationary problem that they themselves had created. And we need to understand where they are in 2023 about that problem. But there we go. So this is the first week of January, somewhere here by this red vertical line. And because we knew, we had that understanding, that clear understanding that 2023 is going to be the year of the dollar, I am simply looking for December, the end of December, which is somewhere here. So if you look at these two vertical lines I've drawn here on the daily time frame from January to January, you cannot tell me that it was not a clear sell. You can't tell me that if you've taken one sell position, just one big sell position on April 2022 last year here. Look at price moving up, accumulating up for the first financial quarter. First financial quarter is 3 months. From January to April, April is the beginning of a second financial quarter. A financial quarter is 3 months. So what do we like to say? We say banks move in 3 months. That's January, February, March. At the end of March, where are we? That's the beginning of April. There we go. This is from quarter one here, January all the way to March. Markets moved into a peak supply. This is important. No, it's not even a peak supply. I tell some lies. It's not a peak supply. Markets moved into what type of supply is this? Let's just clear this up. Let's just get the basics out of the way. I'm going to move fast on the analysis, but this is actually important for you to see. All right, so we're at a PCP. So there was already a drop in trend. So price had already continued falling as early as October 2021. We got bearish engulfing patterns along the way, and markets moved back in there in April. They create a counter trend. That means markets are buying in the short term, right, which is 3 months from January into April. Markets use that first financial quarter to buy. Why are you buying if the trend is to sell? Sell high. They push price up, trap retail traders to liquidity bubbles, and then from the month of April 2022, as the first, I think the very first interest rate, 0.25 basis point last year, if I remember correctly, happened in March, happened right just before the month of April started, and then boom, dollar starts to overpower every single currency on the board, and NZDUSD follows suit, falls like a baby. Find me a single supply. Find me a single supply. Look at this. Valid supply respected. Valid supply respected. Price comes in. A valid supply respected. Price stops here. Valid supply respected. Valid supply respected. The whole year on your daily chart on NZDUSD, if you could have just done this, 2 things, 3 things. Number 1, followed me on YouTube, subscribed and sat down with us for free every single Sunday for these war room videos. That's number 1. Number 2, attended our trading course to understand institutional supply and demand, so that when we're talking about profiling assets, the different types of supply and demand, 365 candles, complicated 365 candles, where's the other one, major turning points. When you understand all these things and you combine them, all you had to do last year was to understand when markets are buying on NZDUSD, they're buying to a specific type of supply. You need to validate that supply, need to quantify that supply, and markets sold out the whole year up until we got to a basin all the way down here in October. And this is where the Fed started to talk about a pause. This is where the market started to talk about, well, there's a change. This is when people started to say inflation is dropping. How would you have known this? Well, it was covered in the war rooms. In my last war room, if you look at the thumbnail, CPI data this week, FOMC, blah, blah, blah. Literally everything was, 4 months ago was October, where I said, look, man, they're starting to slow down. There was even talks about a pause in Fed rate hikes. And so markets took relief rallies a bit back up into supplies. And now the cycle has started again. Here we go, January 2023. Markets are still bouncing off supplies. There is a trend going on here that when you understand it and you start to align your trading strategy on the smaller time frames, I'm talking about daily H4, 1 hour, 30 minutes, 50 minutes, I don't care, you will start to see better profitability. Right, now that that little rant is over, I hope that makes sense. Let's break down NZDUSD. Let's do it as quickly as possible. I'm going to go to a fresh chart because I obviously don't want to remove all this hard work that I've put in here. And we're going to understand this asset for really what it is, without necessarily looking at it in relation to other assets, excuse me. We're going to look at it for what it is. This is NZDUSD on the 12-month time frame. That means one candlestick represents a year. One candlestick represents a year. The data in front of us reflects us from 1972 all the way to 2023. This is an obvious sell profile asset. It's been selling non-stop since 1974. The few times we've had a little bit of 2 to 3 to 4 years of upheaval, or markets trading up, all that's been sold back, right? So markets try and push up, they sell. Push up, they go even lower. Push up, they sell. And then we're at a final push up. And since about 2012, for the last 10 years, banks think in 3 months, take profit in a year. In a 10-year plan, markets have sold again back to the last final push up. So we have a sell profile asset. In the sell profile asset, I want to quickly draw areas of value that are most likely to affect me in 20, 23, 24, 25, 26, for the next 5 years, basically. Why? It's a very big time frame that we're on right now at the beginning, and we're going to start to scale down until we get to relevant trading time frames. But we're not going to go to those relevant trading time frames if we don't understand the direction of what the banks are doing with this whole thing. We track this stuff, by the way, looking at COT data and other various trading tools, which are covered in the course, but also covered in some war room videos and in videos like this, right? So look at this. We can make two arguments. Number one, there is a valid demand, and the valid demand is technically kind of really in control. It's still been around. I don't see anything else right now that's currently that can sway price, right? So this valid demand started in about 2002, 2001 after the tech boom, right? And then since then, markets have tried to come all the way back. We can say markets didn't, reach this demand, and that's fine. That's a cute argument. But we need to triple check that when we switch to a Kinihashi to make sure that the buy orders over here were not used in 2009 during the last banking financial crisis. What's nice to also take note is every time there's a problem with NZDUSD, a problem in the world, for example, the 2000 and tech boom crisis, the 2008-2009 financial crisis, where's 2020 COVID? There it is, COVID. Every time there's a big crisis, this candlestick eventually ends green on the 1 year time frame. Every time there's a financial crisis, it seems like something happens to this pair. We need to identify these assets. Some assets are good at risk on times. Some assets are great at risk off. We must understand what those terms mean because we're going to be trading in different market sentiments all the time. Right, so I'm going to switch to a Kinihashi just to quickly double check this demand down here. And there we go. This demand definitely has been double tapped. Even if you don't want to use this doji candle, which is part of the bullish engulfing pattern, and you want to use the full body candle to the left, you'll realize that markets have definitely, whether you like it or not, returned to this area at least once or twice. All right, so we can call this one movement up, but 2 taps on this area of value. And that's not a big deal. It's just important to know that a demand is in control. Going by Kinihashi once again, by the way, we can also make the argument that definitely a type of supply has been created up here. So now I've got a valid demand and a valid supply. And this is a specific type of supply. Not all supply or demands are equal. They're not all the same. Order blocks are not all the same. And they have different imbalance rules, validation rules, and rules of areas of value that we teach in the academy, right? But outside of this, you can see that there's really nothing on volume-based candlesticks. The complication comes when you use normal Japanese candlesticks, which we should use and understand. When I use this, I realize that this is not a strong, it's not a really strong supply, right? It could be a supply, definitely seems like a supply, but it's not a strong one. We're going to drop to the presidential time frame, which is a 3-month chart. Now that we know our playing field, remember, this horizontal line was drawn to tap the 1-year demand using a Kinihashi candlesticks. And now when we look at the 3-month chart, we can see that there was a supporting demand, supporting order blocks right there on top of the 1-year demand. So it's starting to make sense now. It's like, okay, I get it. Buyers are protecting that area for a reason. Banks want this to drop, but when it drops, they buy it in tons. And this happened in 2009. What was happening in 2009? A massive financial crisis. I'm going to do this horizontal line, right? And then I'm also going to say, not only did markets bounce there, markets then created a new demand, right? And remember, if you don't understand what I'm doing, it's very difficult to teach and give outlook on this particular channel because of what people are used to. All the teaching is down here. These are hours and hours and hours and hours. Oh, there we go. 66 hours, 6.5 hours of video content. Like, we're not messing around. You're not being taught what is a pip and basic stuff. It is rules and rules and rules, rule-based trading, right there in front of you, right? It's literally right there in front of you. So here, I'm talking to people who kind of like have an understanding of supply and demand, or at least want to have that understanding, right? So a new demand is created here in 2009. Markets push up, and then markets have fallen into this in 2020. COVID. How convenient that another crisis comes up in the world and price falls into a demand that was created by another crisis that fell into a demand that was created by the tech boom crisis, right? Markets are not random. But now that I'm on the 3-month chart, I also need to start getting some type of clarity, right? So I want to see how tight these supplies are. There's another supply here. Supply means sell, right? Demand means buy. When I look carefully at the supply that I've just drawn right now with this green rectangle, which I need to delete, you'll note that this week exhausted all the sell options in here, right? So markets did pop this supply, which would make sense because price was coming from a very historically strong demand, right? But along the way, as price was starting to come down and markets were starting to do what they were doing, you will notice that in 2022 of April, markets created a new supply. Wait a minute. Why would markets create a new supply in April 2022? Well, that's because of Powell. Powell said the dollar is God in the markets and the dollar shall rise. I will increase interest rates until I can control inflation. I will restrict economy to save the economy. That's basically the Fed's argument. And last year, by the way, and we'll go back to that. I know I've missed the first ones in the first financial quarter, but every time Powell does something, I don't know if I can find it here on the channel. Oh, by the way, she got a new heart. I should send this out as an email. Those of you who donated to the Rhodes University Cyclothon, contributing to Onako, who wanted a heart transplant. Thank you again. All you traders, I already thanked you. But just so you know, after that event in October, after all those donations, she actually made it into a donor list, had an operation in Cape Town, and she's got a new heart. She has got a new heart. So the traders who are part of that, I appreciate you once again for supporting such a noble cause. Onako has a new heart. You can Google it, Google Onako, Eastern Cape Daily Dispatch. I'm sure a couple of newspapers covered that. You can go check Brush to Live. I think that's the name of the organization. She has a new heart. So some of you traders actually contributed in saving a life, much appreciated, right? But I was saying, these FOMC events are covered, right? There it is a CPI data versus dollar, right? I do cover all CPI events, right? So in April 2022, NZDUSD starts to fall because the dollar is being given that boost, right? So a new supply is created. Markets fall, financial quarter 2 and 3 and 4, back into a demand in October last year. Markets push up, and here we are. If you were paying attention, if you are a true 365 student and you're not really trapped like the Israelites who waited for Moses for everything. And if you are, it's okay. It's all part of learning. But I'm simply saying you've all been equipped and empowered. Most of you, if not all of you, without waiting for me, should have been in valid sales. Most of you, if not all of you, should have been in valid sales at the beginning of this year, because when markets go back to a supply, it doesn't matter what's going on. Markets will sell. And you can see that this candlestick here that made contact means price has been selling off January, February, and March, and now April of 2023, a perfect positional trade. Now we're going to go to the monthly time frame and see, right, if theoretically you could have caught it. There we go, breakup structure in the higher time frames, complicated 365 candles, and just below them, a supply, a governing supply was created. So markets started to sell off very, very hard, right? So this is how I would draw that, although the area of competition is right there. And you can see markets came back into a supply within a supply within a supply. So we've got this trend from last year that is still dominating. This is the selling of NZDUSD that I was talking about that is still continued. Who's paying attention here? Then somehow, while I was away in January this year, at the beginning, markets recommitted, right, to the idea of selling a little bit and added a new supply in January of 2023, creating a bearish engulfing balance. So fine, you missed it. You missed the January sell-off, whatever reasons. Fine. Last year you didn't take us seriously, you didn't subscribe, you didn't join us, so you missed up all those sales. There we go. Month of April picks up right now. This is literally 19 days ago, back into a supply. So where do we think price is going from a governing perspective right now, right? Where? Because I can't see a monthly demand, right? I can see a long-term beginning, a basing of price coming up. But in terms of where price is right now immediately, I'm not an excited buyer. I'm an enthusiastic seller. Moving on to the weekly time frame, this is where it gets fun now, because now we need to understand the areas of value that are going to affect our trading in the week to follow. Right, so let's clear this whole thing up, right? So you guys know that every single yellow zone has been either a 3-month supply, 1-year supply, on the way to a governing supply. I'm going to delete the bigger supply up there and deal with this one, because this one, by the way, is equally part of a governing supply. This yellow zone here, you see this? This is all part of a governing supply. The one in June 2022 and part of the one in February 2023, where price is. So when I drop to weekly, I've got sequence, I've got some alignment, and now I'm looking for high sell-offs within these zones, right? So market's already broken a massive type of structure. I'm looking at weekly now. I'm wondering weekly, if I was to jump in, if I was to put, some money down, where would you betray me if I was a seller? The obvious place where all selling should stop is all the way down here. This is by far obvious. You never sell into a demand. In fact, it is a criteria that we teach in module 2. Where's my module 2? Right here. We talk about value-based demands. For you to get a value-based demand, one of the main criteria about is you must see dumb traders filter in. You must see retail traders selling in an area where they have no business selling. So all selling has to stop slightly above this area. That's number one. This is still a lot of money, right? Remember, every single candlestick you're looking at here represents one long wick. We've got a perfect imbalance in the markets as markets move up. If the sell pressure in this area holds, if all the yellow zones here hold and pushes price down, we have got what we call a beautiful, beautiful wall trade, right? It could create an M pattern. It could create all sorts of silly retail things that they talk about. But keeping a very close eye on our current location in price, we have to deal with this area of value here, a trap door, right? A bullish engulfing pattern right there that is literally slam bang in the middle of a downtrend, right? And that bullish pattern, this demand zone here has to first break, right? So I never risk money in places that offer me low probability odds. Trading absolutely is a risky business. Whether you know everything or you don't, you're always going to lose, but there's no need to lose doing stupid things. Doing a stupid thing is selling when price is sitting at a weekly demand. We need this weekly demand to be removed first. I repeat, it is stupid to say, oh, we're going to sell. Leroy said we're going to sell, and you start opening sell positions when price is clearly in a weekly demand. What you really need is commitment. You need commitment of price to sell, and you're going to see that in the daily time frames, right? So now I'm on the daily time frame on NZDUSD. Just let me get my tools in the road. Guys, if you like this type of content, if this is helping you, educating you, feeding you, any way, please don't forget to subscribe and like the video. I'm gonna fix this weekly zone now and reduce it to a daily zone just so I can see what I'm dealing with. I can't find any other daily zones in here that are valid that I need to worry about. I'm going to use this whole area of competition as a big wick. I'm going to tighten this up. If I look to the left, I can't find any really good enough demands. Yeah, maybe what happened yesterday, today is the 19th of April as I record this, would count as a valid demand zone. We'll see how far that goes, given that we've got a bearish engulfing right here and another bearish engulfing right there. Once again, if you do things my way, this way, you will notice that once you identify a long-term trend, what markets will do for the rest of your life until that trend is finished is markets will keep creating supporting areas of value that support that trend. So we've got a supply within a supply. Even when it's now time for supplies to break, markets will once in a while show up and recreate sell pressure zones, add money, and you'll be able to track that by clear and clean reading of COT data, so you always are in the know of what's going on, right? So people are telling that the dollar is weak. People are saying the dollar is in its last days, if you read all those headlines. But there we go. NZDUSD still falling prey and weak to it, right? So it's not really out for the count, right? That's the area of competition, and that's the clean order block. And you can see price made contact. I guess last week Thursday, Friday, we dropped into Monday. Today's Wednesday. This is where we are. And when price did that, once again, if you really want to be articulate in your supply areas, this is what you have. You've got this interesting problem where markets have to negotiate against these lower curve supplies. Lower curve supplies simply mean they're no longer in that big alignment. It's a supply that's no longer in the monthly, weekly, daily, right? It's just a daily supply that is a part of the sell trend, but not in the protected governing body, right? So something to look out for, and we can allow for these type of supplies to break. Number one. Number two, one supply and two supply haven't given us retest. This is a fresh touch. We know that when an area of value is tagged for the first time, remember, go back if you're registered. It's not just marketing, blah, blah, blah. If you have already got access to these videos, redo key stuff. Go back to this lesson here on areas of value and the rules around areas of value, right? Because some of you forget that markets, you take profit here, fine, good for you. But what about the retest? We know that the retest runs longer. But we know that the retest sometimes will run longer. What about that? So this is what I will be waiting to see. I need to see where price is going based on the small bullish demand that was created yesterday, number one. I need to see, right, personally for me, I'd really prefer price to just go all the way up. Personally, I prefer price to ignore first supply and come back a little bit higher here and dig deep, and then maybe we can start to talk about a sell. Because this weekly demand has not yet been removed. This would be a simple trade for me if it was to work. Remember, I'm not yet trading. I'm just doing analysis. I'm not yet trading. I'm just doing analysis for you. I'm not your financial advisor. I'm just doing analysis. But I'll take profit here. Why? Because again, I'm not a fool. I'm not going to just blindly open a long-term trade when I know for a fact that markets have not yet even given me the green light. Markets need to remove this weekly demand, right? So if I was really desperate for a trade, this maybe might be a place to risk some money. But again, it's in violation with our rules. You see this 1,7 or 1:2. If you come back here to module 1 and you understand the business of trading, when we start to put things together via multiple time frame analysis, that's rule number 1. And then we start to put in our cost analysis, how to grow an account, risk management, pips and all that stuff. We'll then begin to understand that absolutely, without a shadow of a doubt, that it is very possible to ensure that we know how to make money by following rules like risk to reward ratio of 1:3, 1:2, etc. So you need to know this kind of stuff first. And if you look at this trade, it's a potential trade, you potentially could make money, but it's not a sustainable way of trading, right? 1:2. A lot of professional traders use 1:2. At the academy, we prefer 1:3, right? So these supplies, if you look left, don't have a lot of support, right? This was a long time ago, PCP to the downside, but there's nothing on the left side that supports these supplies. So if these areas get broken, I would not be too surprised. But it doesn't give me 1:3 anyway, so it's not a place I should be trading. So for me, to you, NZD is a type of trade that I want to slow down on, watch how price reacts here, wait for a clean removal of this demand, and by the time our war room start in May, there might be a clear path. If markets go up and break this supply, then we need to start looking at where is the true sell within this area, right? Clean imbalances right there. Clean imbalances right there. There we go. So if I do something like this, it's still on that monthly time frame. Don't forget that monthly time frame, right? Fresh touch, retest. So already in a long body of retest. I'm going to delete this here, right? I'm looking at this true higher peak supply. This is a module 2 peak supply. It's already given a short fresh touch and then a deeper retest. So now all we need is for price to show us its hand. If you want to then add in a 2, right, you throw in your Fibonacci from the last swing high to the swing low, which is the base of that weekly demand. We can then start to get a sense that, yeah, okay, cool. Price might actually dig deep. Now that, look at this, we're now within that 0, golden area, right? So we love our 0.68 taglines. Price really went in there and then dropped again. Markets come to that 50% line and then dropped again. So it's up to price now to tell us really the true direction. My take again is I'm gonna wait to see how weekly holds up. This is what we look. This is the H4 time frame. Not really something I want to look at in this particular series, but you can see on the H4 time frame, clean breakup structure. As market's trying to climb up, and so that upward movement that we're looking at right now could potentially end here. Could potentially end somewhere there, and then we can start to negotiate with price on breaking a weekly supply, right? So for me, NZDUSD, just to be clear, is a wait and see until I have clear order blocks and clear direction and a weekly area of value removed, but there's still a lot of sell potential. If this gets removed, we are going all the way down. If this gets removed, we are going all the way down, at least somewhere here. Let's take profits on the daily time frame would look like that. And selling up here or selling up there into there, that's good risk reward ratio. If you like this video, please let me know by hitting the like button, subscribe to our content, check out the link down below, and I'll see you in the next video. 3, 6, 5. Peace.